Thank you.
So we call this Smart Financial Insights, building wealth through discipline. But much more than that, a lot of things are happening currently in the world. The global financial system is shifting, and everybody should be paying attention. The traditional ways of making money have shifted. Over the years, I'm going to use the story. In 2010, as of 2010, I don't know how many people here are, I don't know what the age ranges are here. So if I'm going to use an average of
Say 30 to 45.
okay, fantastic. That gives my perfect example. So 10 years in 2010, which was about 15 years ago, if you're
Mm.
30, you're 15 then, if you were 40, you
Yeah.
were 25.
Yeah, if you're 45, you're
So
30 then.
yeah. So one of the things that a lot of people can relate to, let's not even go as far back to it. Let's use 2015, which was 10 years ago. People 10 years ago feels like yesterday to a lot of people. A lot of people can remember where they were in 2015, what happened in 2020, how the lockdown had occurred, and all the changes that we saw. Before now, if somebody had told you that somebody could be an automation engineer and be writing prompts, I'm sure a lot of people have looked at it as crazy as early as to 2020
Mm.
because there was nothing like that.
True.
Now, as of 2020, there was nothing like the way that we have. Let me use the recent law that was passed in the US about stable coins. With cryptocurrency as of 2020 was still something that was done by just anonymous people that the government were not paying attention to. But as of 2025, the US has passed a regulation. And for US to pass a regulation, it means that the whole world has accepted it. So it means that money that people created by themselves, using code by themselves, the world has come to accept it and is agreeing to take it as money. People don't understand the impact of that. Ethereum has how many, what's the Bitcoin has a distribution of 25 million. Ethereum has over, I'm sure, well over 100 million. I don't even know the market cap of the cap of Ethereum, not cap the total supply cap of Ethereum. But it means that the owner probably gave himself like 50 million Ethereum. Let's say the owner gave himself like 20 million or 10 million Ethereum. Multiply by whatever the current price of Ethereum is today. That is how much the guy has. So automatically, these people created tokens, assign it to themselves, and today you can exchange that thing to USD, USDT, and then convert it to dollars, change it to your local currency, and you can spend. And you can do all those things in the space of 5 minutes. So the world is fundamentally changing. The way money is made, the way money will be made is going to change. I don't know how many people are on those groups that are from outside Nigeria. If you're outside Nigeria, you should know one thing. You're running shifts, you're doing a job, and you are getting paid. If you check the richest people around you, they are not typically the people that do like three, four, five jobs all at once. So it means that there is a lot of ways that the world is changing and you can change with it. So let me cut out some of the let me cut out some of the noise and let's just speak to the slides. And I'll be speaking about a lot of things as we go back. So I'm using personal finance to describe what I described as a disciplined way of building wealth. One of the things that a lot of Nigerians have that I always share in my class is that I can use this generator called I Better Pass My Neighbor to describe the average Nigerian. I can use it to describe from our spending habits to the way that we build habits to the way that the inflation has changed. I can use that as a whole. Now, if you guys remember as of 2015, The Tiger Gen was around, how much was the Tiger Gen around there? Kule, can you remember? Like 2010,
Uh,
2015.
I
That's what
remember when
Tiger
it was
Gen.
2010, it was 15,000 naira. No, no, it was 8.5 as a 2010.
20
Hello?
Hello,
Yeah, can you hear me?
hello, can you hear me?
Yeah.
My network. Hello, can you
Hello?
hear my network? Can you hear me?
Yes, I can hear you. Can you hear me?
I can hear you now. I can hear you now. I can hear you now.
Yeah.
Hello. My network. Oh.
We can hear you
Hello.
well.
Wait,
We
let me
can hear
switch
you
my
well.
network. So let me know if it's better
We can
now.
hear you well. We can hear you well.
Okay, you guys can hear me. Okay, so
Yes.
maybe it's Ajayi's network that is bad. I thought it was mine.
Can hear you clearly. Please go on.
Oh, I thought it
We can
was.
hear,
I thought it was.
can
Sorry,
hear
I
you.
thought it
We
was.
can hear you clearly. Please go on.
All right, all right, all right, all right. I thought it was his that was bad. Okay, so I was saying something that around 2015. I don't know if you guys can remember how much what that Tiger Gen was the cost. It was around say 15 to 20 something thousand, if I can remember accurately.
Yeah.
But today, that same generator is well over 100 and something thousand. Well, almost 100, over 100,000 naira. That same generator that was sold for less than 20,000. But if you come back to how much was it in dollar terms as at 2015? As at 2015, in dollar terms, that generator was around.
Hello?
Yes, sir. We can hear you.
Online banker, we can't hear you. We can't see your screen. And you're on mute.
Can you hear me?
Yes, we can hear you now.
Can you see my screen?
No. Can you please reshare?
Okay. I don't know why. I don't know if it's my network or yours because you went off for a bit. I don't know if it's mine. Can you guys hear me clearly?
Yes.
Sorry, guys.
Yes, we can hear you now, sir.
Sorry, guys. I'm in Nigeria, so a lot of things are happening at the same time. No vex, like. So, as I was saying something, I was talking about the Tiger generator. I was using it to explain a lot. So I was saying between 2015, around 2015, that generator was around $80 to $100. Now, $80 to like $100 is like between, between 110 to 150,000. So automatically something that was still the same value in dollar terms is worth a lot more today in naira terms. That's what inflation simply is. That's what devaluation has cost us, mixed with inflation. So, and currency has been devalued over time. That has impacted the way Nigerians live. That has impacted the way you and I have lived. Then there's inflation. Before that, you could buy a bag of rice. Bag of rice then was around 8,500 to like 10,000 naira. Now the same bag of rice costs with the drop and a lot of things that thank God nobody's recording so that they'll go and say, okay, online market said this one. But I feel like a lot of what the government is doing has some progressives in it, or some of them still are not sustainable. You can't keep importing food. At the moment, the government gave away, but part of the reason why you are seeing food prices drop is not because the farms have become safer. It's not because the farms have become more productive. It simply means that the government did something they should have done a long time, allowed certain kinds of food to come in. But now, in a bid to buy up, because of lots of hardship in the country, in a bid to buy up, in a bid to buy up the confidence vote from everyone, they allowed a lot of food imports so that at least they could moderate inflation to bring down inflation. But that has other effects, it has other its other effects on the farmers because some of the farmers that are spending the same amount going to the farm, the cost of energy hasn't dropped for them. The cost of transportation has not dropped for them. The security has not dropped for them. The infrastructure for the roads that they pass through, the security that they pay to some of the people to guard their farms, it has not dropped for them. So they are still operating at that same cost, producing the foods. And now there's a cheaper alternative for people. So what has happened is that they've had to incur losses for them to be able to supply food. What happens in the next planting season and in the next storage season and in the next distribution season, because it's only for a season, because seasons come and go, the farmers need to know that they will remain profitable. That's what keeps them in business. So you can then disincentivize farmers. They lose the incentives, and then you have a lot more food crisis in future because you can't then become totally import dependent. You lose. It's a national security issue, and it's a national security issue, and it's an unemployment issue. So in balancing all that, that is where the country is at the moment. But how do we bring that back to us as individuals? Sorry, let me go to my slide. So how do we bring that back to us as individuals? If I'm bringing that back to us as individuals, using the generator idea, I better pass my neighbor generator. Why the name I better pass my neighbor even came about was because it was said that that generator was, when you buy it, especially for those people that are living in face me, I face you, when you put it on, because that was what everybody then could afford. Like the poorest of the poor then could afford that generator to pepper people. Because if you've saved for like a few months with 8,500 or 10,000 naira, you could buy that generator. So people were buying, you can, as a bricklayer, if you work for 1 week, carrying cement at 800 naira or like 1,000 naira, you buy that generator in about 1 week plus. You comfortably, and when you go home and turn it on when there's no light, you say, I don't buy that generator, I don't better pass my neighbor. That's how the whole name came about and all. So Nigerians have the pen charts to want to always, live, if not somewhat above their means, because a typical bricklayer will spend all his money to look better than his neighbor. A typical lady in Nigeria will spend her whole salary to buy ashwebi so that she will not be the only girl that will be left out, that will not look as nice in a wedding, even if it means that the rest of the month she goes begging, but that somebody will come and speak to her somehow for not looking good in this wedding that she didn't even need to attend. So it's a lot about a mindset shift that all of us need to have. So the number one basic thing when you talk about personal finance, I'm not even going to go further, is about our budgeting. How do you allocate your resources when you get it? What are the first things that you do? How do you avoid leakage? For us as men, I'm thinking that a lot of the people here are men. Am I correct? Am I correct, bro? Hello, Shogun.
Yes, you are correct. Sorry, I was on mute. I had to unmute myself. Yes, you are correct. A lot of us here, guys. Yeah.
So a lot of the people here on the call here are guys. So for us guys, the way that we handle money is a lot more different from women. One of the things that you find out is that men take more risks, so men tend to make a lot more money. But the women are catching up today. The women are catching up because the skills required in the labor force, in the workforce, are no longer as manual as they used to be. 50 years ago, before you would see a woman because you see the number of women that are in the workforce like today, you need to assemble people from different countries and combine them together. But in Lagos alone and Abuja, you will get that number for people that you'll have gotten in countries before. And now, if you want to even take it like globally, before now, you would need to have there were mostly factories, you needed to work in construction, military, or do something that had like a large corporation. But now that a lot of the skills are democratized, people can cook in their homes and have a YouTube channel that will make more money than you've been working for 10 years. Somebody can own a small startup today. All they just need is to probably know how to code, bring one idea, and there are soft skills that people could have. So women are leveling up a lot more. So now it comes down to you as a man. How do you allocate your resources? How do you prevent leakages? It's not about just when you get money, you need to settle family bills, or you need to settle personal, you need to go and enjoy yourself, you need to go on vacation. How much have you allocated to savings and investment? And when we talk about savings and investment, one of the traditional ways that people have saved over the years in Nigeria is that people have typically said once they get a bulk sum of money is to go and buy land. Just buy land and wait. We do that a lot. It's not a bad investment. It's not a bad investment decision. But what has been the multiples over the years? I'll go back to the stock market. So now I'll use that to just talk about the stock market, which we'll still talk about later in the slide. If you had bought something somewhat like a GT Bank shares a few years when GT was like around 10, 15 naira, and you had allocated, say, 10,000 naira, then 10,000 naira then is not the same 10,000 naira now. And you are buying up those shares over the years, over 10 years, you have been doing that every month, or you're doing that every month, or depending on your income. You would realize that by today, you will have had somewhat between 10,000 to 20,000 to between 10, 20, or well over 200,000 units of, say, GT Bank shares. I'm using a conservative figure for like people that don't even earn so much. That is another form of investment. If you had had money in, say, mutual funds, or you're converting some of your money to dollars and using it to roll over in fixed deposits in USD, if they were paying you a particular amount in 2015, 2014, 2013, that amount was around $150. So it means that if you had 1.5 million naira, you had $10,000. Number of people had 100,000 naira that they had access to, 150,000 naira that they had access to. They would have easily just change that money, change it into this thing, and let it keep rolling it over at the smallest interest rate of even 10%. Today, a continuous doing of that today, you would have well over between, say, that you're not even that you're doing that thing, say, every 3 months. Today, you would have well over $20,000 to $30,000. Plus interest and compound interest, you should have well over $30,000. These are small decisions that we can make on ourselves that yield a great fruit in the long term. Now, in your budgeting, the typical budgeting rules tells you that you need to do 50, 30, 20. 50% you allocate for your essentials, 30% for lifestyle, then 20% for savings and investments. Now, the type of investment, the type of budgeting that you do depends on your own unique circumstance. Not everyone here earns the same amount. You know what you earn, you know what your resources are, but I'm going to use the lowest so that the people that have earned way more can say, okay, I can allocate more depending on my own unique circumstance. If you are a person that earns between, say, 100,000 naira, we're going to use 100,000 as base figure, while simply saying you can take 50,000 naira for your essentials, 30,000 naira for your lifestyle, and 20,000 naira for your savings and investments. Why this is here, this is here, and somehow it seems like it's difficult to apply, is that we all know what the market is. Like I mentioned, when you go to the market, if you take 20,000, 30,000 naira to the market now, you know the things that you can buy for you if you live in Nigeria. I don't know, are there people that are outside Nigeria here on this group?
Yeah, we have quite a lot of people outside the country.
Fantastic. Oh, okay. So let me tweak it up. Oh, press reset for my brothers. Okay. Now, for the people that live outside, amazing. You guys are even at an advantage. Advantage is advantage because, when you bring in the cost of living abroad, by the time you've paid rent monthly or you have a mortgage that is running, you know how much you'll have taken out from your toll. But for the people abroad, I'm going to be relating a lot with Nigeria and abroad, because what is about to happen in Nigeria for the next 5 to 10 years is somewhat of what happened around 2014. In 2014, between 2012 to 2010 to 2014, the 2015 was a reversal. So within that period, you notice that for the people that were working, I don't know where people that were working in Nigeria then, flight to Dubai, return ticket to Dubai was 90,000. That 90,000, they were offering you, some people were offering as much as 20% discount. They were offering organizations a group package for 60,000 naira, return flight to Dubai. They were offering banks, they were offering insurance companies, they were offering people. A brand new car was around 1.5, 1.6 million. Are we going to get to that point in terms of currency valuation? I don't know. I don't think so. But I think it's going to boom in that sense for people to want to come back. And we have a trajectory of growth. Yes, I agree. One of the major things is the stock market. I want everybody to pay attention to the Nigerian stock market. If you've missed it this year, have like a longer term play. A lot of money is going to flow into the Nigerian stock market this year, next year, this year, next year. Next year, I'm conservative because people are going to be watching out for what will happen, in the political space. But they say in some of the private rooms where I meet people, they're like, it's a done deal. So you abroad, you have an advantage of saying that by the time you convert your 200 pounds or your $200, you are going to be buying something worth, I'm going to use interest rate, for example, now. Treasury bills interest rate as at last week was around 19 point something percent. So if you had $1,000, $1,000 is 1.5 million naira, and you were getting 19% in Nigeria, and then you were 19% per annum. That return, if you were to take that same money and put that money in a fixed deposit in the US or in the UK, you will not get more than 5%, if I'm correct, for some of the high interest accounts, with inflation figures dropping there. So by the time you even change the amount to dollars, you see that your return in the long run, especially with Naira looking that is going to appreciate by December, you will now start to see that, okay, if I had invested some of my money in Nigeria and invested some of my money in dollar terms, on the average, by the time I check my returns at the end of the year, I'm ahead. So I want you guys to be looking at Nigeria. Let me not digress very far from my slide. So we're talking about allocating our resources. You have your mortgage, you have your insurance, you have everything that you're doing. If you live in Nigeria, you don't have insurance, you have rent, you have school fees, you have all those things that you need to allocate your resources to. We're saying as much as possible, can you try to use 50% to handle some of that? For the people that can't use 50%, they will not keep 30% for lifestyle so that you can drink your beer. You can go for one or two parties. You're not a robot now. Man will not live by bread alone and just die now. You have to move body, shake body small. Then can you just allocate 20% to savings and investment? Now, if you're over 30, if you're over 40, if you're over 40, they speak a lot about compound interest. They'll tell you, oh, if you're saving $20 for the next how many years, you're going to make XYZ amount of money over the long run. The difference between a lot of people that are over, say, the age of 35, 40, is that what you have lost in time, you have gained in experience. So a lot of people are not earning the same amount as trainees. I'm not saying there are people that do not fall into that category, but a lot of people are not earning the same amounts as trainees that just started their life. A lot of people are way ahead. Now, for the people that are not way ahead, You have gained valuable life experiences for you to think of starting something tangible on your own. I don't believe in any defeatist mentality. I tell people, if you're an employee and you've gained experience for 10, 15 years, you're in your 40s, you're not supposed to be looking for the next promotion somewhere. You're supposed to be looking for the offer that gives you the most money, because you are 10 years away from 50. So you are looking for the best offer that gives you the best money, number one. Number two, you are looking for the best way that you can apply what you have learned to start your own or partner with somebody that started your own. If you've not been fortunate enough to say, you've had good career growth and all, how can you take whatever you've learned to start to form your own business? You need to move from, I tell a lot of my colleagues that started banking with me. I start to tell them that after a while, you need to start moving your mindset from employee to founder level for sustainable wealth, because all of us will not work for somebody for the rest of our life. No matter how you try, you can only be CEO at a point. But you see that poultry store or Mr. Shegun Consulting on the side, or this small something app, or this whatever business form you, whether it's corporate business, whether it's a normal business, those ones will live with you till you leave this earth because you founded them. And every brick that you build on it is on your own name. And why I say for people that are above 40 is because after this age, a lot of people are better at managing their risk. They are better at the way that they think. They are better at the networks that they have. So statistically proven, it is easier for you to start a successful business post 40. So if you're in that line, please start looking at that. And especially for my people abroad, you don't have to do it all by yourself. You could start as a small venture. Find out people that are trying to do something, whether it's abroad there where you are or back here in Nigeria, and see how you can get into some of the ideas that they own, or some of the ideas or the solutions that you can even bring back into the country using your own, small capital. It doesn't have to be you coming back to this place to come and say you are owning anything. No, it could be something like a soft skill that you are bringing back. There's a lot that will be happening. I'll share that other distance towards the end. So as we're allocating our resources, we've said 50% essentials, 30% our lifestyle, 20% to our savings. What are the things that you are please, who here I'd like to do, who here has an accurate figure of how much they spent last month? This month is October. Who here has an accurate amount? If I just ask, an accurate amount of everything they've spent in October. Today is 26th. I just want to see with a raise of hand. Shegun has raised his hand. Yes, Shegun raised his hand. Let me see other hands. Are there other hands in the... I'm not seeing it. Sorry, I can't hear everyone. No. Shegun raised his hand.
Wow. My people have
Okay,
my hand.
Ernest raised his hand. Okay, we're 28 on this call and only 2 people have raised their hands. So it's important for you to know exactly how much you earn and spend. Exactly how much you earn, what came in and what went out. Now, there are different applications you can use for that on your phone or on a distance. There's an app called Toshl, Toshl. You guys can download it on your phone, Toshl. If you buy this thing, even next year for business owners, it's soon something that I'm going to advertise when I'm doing my training for the tax for next year for business owners. You need to, as a matter of urgency, know what you spend for proper bookkeeping. That's for business owners for tax next year in Nigeria. But for you as an individual, if you don't know where your money goes. There are some people that their money is side chick that is spending, they are spending most of their money, but they are not aware. They are not aware that all that send me small 20K, send me small 20 pounds, send me 50 pounds, $150, $300 that is going to maybe one outing or one vacation, or that's where their money is going to. Some people don't know that. But if you don't know exactly where your money is going, you wouldn't know how to track it. You wouldn't know how to take out the portion that you're supposed to be even. So people can do 40% of their money, 40% as savings and investments. But because the money has been leaking through one other means, they don't know. So everything I've just said here is just within this, your wants, needs, and what you should do. The 50% that you're allocating to everything that you have, I put it here as, rent, food, healthcare, school fees, and your essentials. Your 30%, weddings, like I mentioned, lifestyle. Now, for this 30% here, you can sell some things that you can cut out from month to month. It's not every month you attend weddings. It's not every month that you want to go out. It's not every month. You can just decide to take a lot more money from there and allocate it to your future. I would like to speak to this needs as adjusted. For people that are younger, most times, I don't know, for people that are younger here, you can have more savings. If you're not married on this call, you have the ability to save more than somebody that is married, because you can be more aggressive with yourself to punish yourself and say, this month, I must buy this number of shares. I must have put 100 minimum this amount in a mutual fund. I must have bought treasury bill with this amount. I must have bought my first gold and silver by this amount. I must have owned one
Recording in
coin.
progress.
I must have owned one. Oh, I'm seeing one lady joining us. Anne, you're welcome. I must have bought my first coin in cryptocurrency to say, okay, these are the tangible assets that I don't need to step out of my house to acquire those things. I could use an application to buy all those things and watch them month by month as they grow. You don't need to leave your house. So if you are younger, you can be more aggressive. But if you are married, now married has its own peculiarities. If you're married with a spouse that is working, you have the ability to combine incomes and then plan for savings. If your partner and yourself are earning more, statistically, I like to use statistics a lot. If you guys watch a lot of my videos, I like to speak to facts. Statistically, married couples that are earning a lot of money, that earn money together, are richer than single people. Check the top billionaires in the world. A lot of them made a lot of the money that they made mostly as billionaires because they had their partners. At one point, check Mark Zuckerberg, after just this thing, he got married. Jeff Bezos has his beauty.
Sorry, we lost you there. Sorry, you just dropped off.
Hello.
Yeah, welcome
Can you
back.
hear me?
Yes, we can hear you. Welcome back.
So I have two networks connected for this call. I don't know why it's. I have two networks on standby so that MTN does not mess me up, and I don't understand what is happening. So sorry, guys.
No problem. We understand. You can please continue and share your screen.
Okay. So let me be sure that I was speaking to Annie. So I was just speaking to this part where I was saying you could be more aggressive with yourself as you're younger. And as you're older, if you have you and yourself, I don't know about couples, I don't know what people's unique circumstances are, but if you don't discuss finance, for most of the people that I know that are doing well as business owners and that are heavily investing, together as like couples, people need to have that conversation. Just this conversation that we're having. Like, madam, have you bought stock this month? Which stock you won't buy? Have you heard that MTN, they are saying MTN is going to get to 1,000? Are we supposed to be, how much are we putting inside? 200,000, 300,000, $100, £200. We're looking at AI boom. We're looking at certain stocks within the AI space that we're feeling like in the next 3 to 4 years, they might do a 300 to 400%. If we start to put $20 every month or £20 in it every month, what would it yield us in the next 5 years? I hear that there's this cryptocurrency that's, that might do like well over 300x in the next like 1 year. Let's just put a small amount. Let's carry 100,000. Let's carry $100. If it goes missing, it won't pay us that much, but just imagine that $100 turns to 1,000. So those are risky investments. So you now put yourself in the medium, low, and high risk. We're going to get there. So I put these practical budgeting tools. Like I mentioned, I every other thing that is here, I summarize it in getting a digital network for budgeting your app. You're supposed to know the exact amount that leaves your hand every month for you to be able to plan yourself properly. So just download that app, Toshl, TOSHL. You can customize every budget, everything that you spend. So if you used to buy fuel a lot, for people that are in Nigeria, they're always buying fuel to power generator. Every time you buy fuel, label it there, fuel for generator. At the end of the month, you can then see you see the figure for fuel. Anytime you buy fuel, you click on it, put 7,000 naira. Anytime you buy it, 8,000 naira. At the end of the month, you can now see, oh, I spent 200K on fuel for generator. Is it now time for me to buy an inverter? What would now be the cost for inverter? And then can this cost now, would it now be reasonable in a year instead of me spending this amount? For the people that are abroad too, you can still find out, okay, maybe most of my money is going to rent. It's easier to compute that one. Most of my money is going to rent. Most of my money might be going to eating out. Or most of my money has been going to me sending a lot of money back to the house. Last month, this person called me. Last month, I gave this person money. Should I cut back on some of this? Because black tax is a very heavy thing for a lot of people in diaspora that still have like siblings and maybe like parents back home. Sorry, guys. So I'll just get that digital tool. So this is all part of just why you should budget. Now, I want to talk specifically to our investing style. Your age determines your risk strategy. If you're younger, you can take more risk. As you get older as an individual, you need to work on your capital appreciation. So for the people that are on this call, we're estimating that people are between the ages from 25 to above 40. So as you get older, your risk tolerance, some people still have very high risk tolerance, but financial literacy will tell you that you need to start coming to cut down. Like your risk profile, for starters, between 18 to 25, you can be aggressive. You can be conservative. You can start to become mild. You can be a mild risk taker between 25 to like 35. And from 40, you can start to become like a lot more conservative. Then from 50, you're supposed to be super conservative. The things that you're supposed to be putting your money in are supposed to change. So that's when you now talk about assets allocation. For the older people, for the younger people, we have a 20-30-50 ratio. For the older one, you can do a 70-25 ratio. Now, this ratio falls between your low risk investment, your medium risk investment, and your high risk investment. Now, whenever you are investing, you're supposed to be thinking long term. In the short term, anything can happen. Donald Trump can come out and announce a policy. Tinubu can come out and do anything. But in the long term, for valuable companies, it always wins. Gold can fluctuate up and down, whatever it likes. I don't care what the price is. But from the beginning of time, from the time the Bible was written or the Quran was written, we will hear a lot of how they traded gold, carried gold from one point to the other. Since that time till today, the price of gold has continually risen. It has had its backdrops, but the price of gold has continually risen. If you did anything like buying gold from the day you were born on this earth, allocating any amount that they give to you, taking 30% to buy gold from the day you were born till today, that amount of gold has held more value than almost anything that you will have owned. So over the long term, certain assets always do well. So you need to always have like a long-term horizon. Now, what are the baskets of the things that you should put in your money into? Which is essentially what everybody, one of the key questions everybody wants to know. What should I be doing with my money? How should I be allocating my resources? So it falls within three things. You have your low risk, your medium risk, and your high risk. Now, for a lot of people, so let me just speak to them, then I'll now digress. So you have for your low risk, you're trying to preserve your capital. So you have your fixed deposits with the banks, you have treasury bills, you have government bonds, you have all the money markets, mutual funds and all that are in the money market. You can save in dollars and earn interest in dollars. That is still part of all those things are low risk. Now, how do you identify something that is low risk? Anything that promises you an interest at the end of its tenure, low risk. So they tell you, put your money in this, and this is the amount you will get. Guaranteed amount is a low risk investment. If you put your money in any bank now and give them 100 million, and they say they're giving you 20%, 20% is 20 million. You are sure you will get 20 million at the end of the year, guaranteed. If you do treasury bills today with the government and the interest rate is 15% and you put 100 million, at the end of the year, in fact, before they deduct the money, they were going to deduct less 15 million. You see about 14 point something million in your account. You've given them 100, when the money comes back, 100 million appears. So they've given you your interest upfront. That one is sure banker. If it's bonds that you did and you agree to that amount, whatever coupon, even if it's for 4 years, because I don't know if you guys know how bonds work. If you agree for a bond of 20% with the government at the coupon rate, you will pay thrice a year. So it will now be coming every quarter. How many quarters are in a year? 3 quarters, yeah, or 4 months, yeah. So every quarter, at the end of every quarter, you get like that money divided by 3. Yeah, there are 4 quarters, yeah,
Yeah.
of 3 months.
Yeah.
Yeah, 4. Okay, so at the end of every quarter. At the end of every quarter, you would now get that money divided by 4. You now be getting a particular amount. Some of them are done by annually, if I'm correct. The Sukuk bond and all. Or you'll be getting a portion of the money every year for that year, for the number of years that you've. So those ones are fixed. You're not even going to think of it 2 times. So those are how you identify low risk. Whether it's your dollar investments and they promise you 7% at the end of the year, you know that you're getting that amount. So low risk. Now, medium risk assets, these are the ones that you can say, okay, it's not very low. My money might not disappear, but anything can happen. For example, if you had bought some shares in Oando at the beginning of the year, by like June, Oando shares had lost like almost 20% of its value. So now, suppose that someone that puts in 100 million, when you put in 100,000 naira and 20,000 naira leaves like now 80k remain, it doesn't look so bad. Now, when you put 1 million is 800,000, it doesn't look so bad. But when you put 10 million and it's now remaining 8 million, what kind of mistake have I made though? But when you've put 100 million and it's now we are left with 80 million wiped out of the money, it sounds very significant. That's in percentages. But your money has not gone totally. You know that this company is probably doing, they're in business, you know what is happening, you can hear them in the news, you can go to their office. Like it's medium risk, because the upsides, what can happen to some of those companies are market forces, environmental forces, corporate governance, all those things come into play. But when the upsides come into the medium risk, the upsides could be high. The same way stocks rallied this year, some people bought GT Bank shares.
We lost you for a few seconds. Some people bought GT Bank shares.
Okay, I thank God you had me to that point. Wait, just
Yeah.
can you please hold on? Let me try and switch this internet to another one.
Okay. Okay.
Just give me 1 minute. Hello, can you hear me? Can you hear me?
Yes.
Yes,
Let me
we can hear you now.
let me see if this will be better. So some people bought, let me just go back to my slide. Okay. So can you see my slide?
Yes.
All right. Okay. Some people bought GT Bank shares when it was 16 naira. GT rallied up to 100 naira. So it meant that if you had taken 60 million naira to buy GT, in the space of like 3-4 months, you had 100 million in your account. Now, the stock did 100 and came down to like 90 something, losing some steam. But you could tell that this is returns that you will not get for anything that is promising you a fixed amount. So the forces of the market are not the forces of the market are not stocks. We talk about a lot of their commercial paper and bonds, but not as high as what the banks were trying to demand from them. For example, Dangote was trying to raise like how many billion? He knows what he's going to do with the money. But for him to go and borrow that money from the Nigerian banks that were like almost 30%, it was too expensive for him. So he'd rather come and give that money at 25. Why is medium risk is anything can happen to Dangote. His workers can connive with him and burn down his factory. And if they burn down all his factory and say there's an internal coup in the percentage of it happening is less than 5. In fact, because this MTN we can just hear one day that's Nigeria and the person is trying to disrupt the business. They're not having a problem with the government. The government has fined them. Shares can now go. So all these things are things that can happen. But would the company go to zero? Very real estate something can happen to one section of the land. Land that you bought for one, do you know that Tinubu is the one that owns the 3 plots from your place down to like 2 hectares, and he has personal interest? All of a sudden, they've started doing roads there and street lights there of of the place when you're in Nigeria. Overnight, your 1 million naira can change to all the lands here. They've mapped it out for demolition. They are now coming out to go and negotiate with this authority. Your 1 million naira, just give me. I don't want to be part of this problem until they resolve it all. So those are some of the risks that are risk investments. High risk does not mean Ponzi schemes. I'm going to speak about that in the next slide. High risk means that your return, because typically in life, the higher your return, the higher your risk, the higher you expect a higher return. That's why it doesn't make sense to certain people when you say, guy, I beg if you give me 5 million naira, or bro, can you just send me like $5,000? I'll just add like $200 when I'm giving it back to you. What are the upsides of the person? Because it becomes a very high risk. What are the things that the person doesn't pay you that money? Back. Take you to Amadi, you're sweated for high risk, but is your return as high? That's why some people invest the currency, they pack all their money and put in something like cryptocurrencies. And if there's a significant drop, they lose half their wealth. The last time that they're not on rare earth metal because of the China saying that they were banning that were passing through them. They had to limit some of them. And those rare earth metals are what are used for AI chips and electronic vehicles. So it was seeming like they were trying to colonize the markets of the world. That's why Trump reacted that way. Some traders in the crypto space had expected overnight the market dropped by almost 30%, I mean 20%. What did that do? What did they kill themselves? Some people committed suicide. So those are very high risk investments. And overnight, it's still recovered. And some people that said, okay, let me put my money at that time, made like almost 20% overnight. So if you had put in 10 million, you had made 2 million naira in less than a week. So these are very high risk investments that could return a higher amount. Some things, again, like penny stocks, there are some stocks that are coming into the market, especially in the US stock market, that people haven't really heard of. They are like below like 50 cents and all. And all of a sudden, you just hear that Google has acquired that company that's affiliated to that company. That 50-cent stock can climb from 50 cents to $4 in one day. 50 cents to $4, assuming you are putting $500 in that stock. That's still how your return comes. But in all this, your financial literacy tells you that it's not about all these things that I'm saying, high risk, low risk. What do you do with it? The older you are, you are supposed to start moving from high risk investment to low risk investments. The younger you are, you're supposed to have your assets allocated between high to low risk. Now, as a rule of thumb, whether you are young or old, you should have your risks spread across this point. If you're not up to 50 years, you should be playing a lot more between the low risk and medium risk investments. If you are very young, you should be tending to have a lot more in your high risk assets that could give you an uptrend. Why is that? If the companies that you have researched, because you're not doing this blindly, if the companies that you're hoping are going to do well, your returns are a lot higher. I'll use example, Bitcoins. A lot of people here that say they are 40 years, as of 2010, a lot of you had probably heard Bitcoin one time or the other. But because it did not make sense to you, you did not put sense to go and say, that thing that is money, they say is digital, I know this thing. But imagine that you have an eye because you have listened to this class today. You have an eye for any investment that comes up. I didn't say Ponzi scheme. Any potential investment you hear of that is gaining some news that you're hearing about repeatedly in the news. Just use this as a rule to gauge. If you start to hear about an investment, an asset class like AI, you start to hear about people talk about it in the news. There is something in this, like right now, one of the things that is hot in the news is they are talking about rare earth metals. I don't think this conversation was there 10 years ago. Now, when you start talking about rare earth metals, you start to hear about AI chips. I start to hear about Nvidia doing this one. If you pay attention to the financial news, you start to hear companies that say, oh, we're planning to do this launch in that same year. We have big plans. There is nothing that stops you from taking your 10,000, 20,000 in Naira. I'm going to say, oh, I've been hearing this company's name. I don't even know what they do, but they look like they have an uptrend. Your 20,000 Naira can return 1 million Naira. Your 20,000 Naira can go to zero. But the pain of you losing 20,000 to zero will not be as high as the joy of you gaining 20,000 Naira and converting it to 1 million Naira. That is why you must at every point have a portion of your money in high risk assets. And that's why time a lot more favors the younger people. But you, as you get older, you need to start to concentrate your resources between low risk and then medium risk. You're not going to go and gamble your futures, your children's future, and your own personal safety on things that will go to high risk and they go to zero. The person that is 20 can afford to lose half his portfolio and build it over time. Painful, but possible. But if you at 40, do you have 10 years for you to start to build from zero again? You have a lot more responsibility than someone that is 20. That is why even if the upsides are looking like it's almost guaranteed and that you're sure of this thing, you researched it, you still need to play under caution. So for people this age, most of the time you're advised to seek out things like the stock market. Stock markets in the sense that you are going to look at the stocks that are trending, not just trending, sorry, let me not use the word trending. Use the stocks that are applicable for what is happening currently in the world and where the world is going in the next 5 years. That gives you a greater play and a better upside. Like I mentioned, there are some stocks right now that are affiliated to companies. No, I didn't say Nvidia, I didn't say AMD. There are some companies that are affiliated to them, supplying them some essentials that you've not heard of. Those companies might evolve into being bigger chains in the next 5 years, especially in the US, as it has to do with the US. China, that market, please pay attention to it. China, please pay attention to it. So you start to look at what are those companies. Nigeria, as Nigeria starts to do better, there are things that you should open your eyes to. In the US, you start to talk about Nvidia, Microsoft, Facebook, but those are the biggest in the stock markets in the US. When it comes to Nigeria, what are the people that are gaining ground? You start to hear of it is MTN, Airtel, Boa Foods, Dangote Sugar, Dangote Cement, Dangote Refinery, Aradel Holdings, all this will. So what do? And that tells you that we are still at that base of survival. We're just getting past we're still getting past our basic needs in this country. When those guys are talking about Elon Musk is already talking about robots and sending a satellite that will be sending internet to everybody into the world, making it bandwidth cheaper, talking about those ones. Dangote is busy building the biggest refinery because we've not solved the problem of fueling our cars with the cheapest fuel to move from Lagos to Abuja. We've not solved the problem of having people eat comfortably any kind of meal that they want to eat. So that's why people that are producing pasta, salt, flour are still in business and still making bank, because those are the things that are upmost in demand. He said that if anything that you're producing in Nigeria is competing against food, I expand that to mean that anything you're producing in Nigeria is any service that you are rendering in Nigeria is directly fighting for market share from essentials. Because if you check, you must bathe. So soaps, food, see UACF food, see Pfizer, see Pfizer, which is drugs, see what's the name of that company? Oh God, what's this stock that rallied recently? Sorry, just keep my head. See MTN, you must make calls, you must use data for calls for things like this to stay connected to the world. You must watch YouTube, you must watch Netflix, you need data for all those things. So we're still at the base of survival. So you should look at some of those stocks. Look at the REITs. These ones are real estate investment trust funds. Those ones are, there's some companies that are REITs in the Nigerian stock market. What do? They buy out properties and they do it in an organized way. So if you don't want to buy a house that you're thinking of, oh, or money layer, how you're going to go and with your land perfection bill, you can still put your money in this as a form of investment that still yields you returns. So for most people who are middle-aged, let your money lie within your stock markets, mutual funds, treasury bills. Spread your money across those places. That's how you get your best return. And then real estate. And then real estate. Then leave a portion of your money to still remain in high-risk assets. Okay, I don't want to dwell on this. So I would like to speak to this a lot, because one of the things that happens in Nigeria is that Nigerians are quick to convince. They say Nigerians don't trust. It's not a trust. It's not a trust society.
It's a
But
low trust society.
low trust society. Oh gosh, thank you so much. My English is failing me this evening. Nigeria is a low trust society, but Nigerians are quick to trust. It sounds not logical, but it's actually logical. If you can give Nigerians a reason to trust you, to seem like they trust you, they try to go all out, especially if he has a lot of returns for them. It has not happened once, it has not happened 2 times, it has not happened 5 times, it has not happened 10 times. We all know of a Ponzi scheme that one person, maybe yourself, has been involved in. Some people even made money from it, while some people lost a lot of money. But Ponzi schemes exist because they promise you a return that is almost unrealistic. So they are promising you that you are going to make, if you put in 100,000 today, if you put in $200 today, you'll be making back, say, 2 times the money. You are making back 2 million in less than 1 month, or 1 month. This person has done this. If you don't do it now, something just goes. This person did it, do it while it's hot. And then secondly, our own greed then comes to play. Some people then know that, this thing sounds like it's not genuine. If I put my money in this, but you know what? Let me just cash out. Cash out at the expense, like I started with I better ask my neighbor, because I told you I can attribute everything to that name alone on managing your finances. Let me just cash out now, not thinking about my friend this guy that just entered. What if his money hangs there? It's not your problem. Let you just cash out your own. So collectively, everybody can go and burn, but let you just cash out your own. That's how a lot of people get into trouble. And then do a lot of the investment that you're going to be doing, as much as possible, let there be a regulation around it. Let there be trust around it. Anything that anybody is trying to sell to you that doesn't have regulation, doesn't have a person that you're going to hold accountable, please, please, please stay away from it. For a lot of people in diaspora that are here, and for the people listening on this call, you see that everything that I've told you the guys to, to try to do, are some of the things that you don't need a human factor, because I realize that the more human factor that you need to assess some of these investments, the more the potential for you to run into trouble, from my experience. So for businesses, if you notice, I never mentioned about anyone starting any business here. Maybe I'll speak to that lastly. It has its upsides. But if you're doing any investment, any business that you're starting abroad, you can easily do that you start a business that has, from day one, if your employee steals from you, sharply report him to the police, jail. So but the only downside there is that you must pay the workers their wage. But is your business going to generate that income for that period of time? Well, to be able to pay those number of workers, or for you to take that sweat, the upsides are still there for people that are abroad because of the incentive the government gives to like business owners and the tax benefit. So if you can try it, please, as much as possible, go into it. But if you're in Nigeria, you need to be a superhuman for you to start and run a successful business in Nigeria. The upsides are so much. The upsides in the money that you can make are so much. But can you run into trouble? Yes, you can. So as much as possible, you see these things called Ponzi scheme. Anybody promising you any amount, oh, this person did it, oh, this person published it. Me, I'm not going to share anything on my platform that is not regulated, or that is not straight from CBN, first of all. So that one is even out of it. Celebrities, all these people, in quote, celebrities, he has 5 million followers, everybody's listening to them. Please be very careful so that you don't tend to lose your money, and tend to ask questions for people that are I won't say experts, for people that are in the finance space. They have a lot more information than you, that you are not, as exposed to that. I'm going to speak to insurance as a form of protecting your wealth and yourself. All the money that you're going to make, all the monies that you will make in this world, if you are not healthy, then it's useless. They say we all have 10,000 desires, but a sick man or a dying man has only one wish, which is to get well. So for a lot of people, I put this because I am speaking a lot to Nigerian community, but people abroad, you automatically have your health insurance, but some people still don't pay their health insurance abroad, sure. That one is a story for another, but a lot more people have their health insurance. But in Nigeria, for a lot of people that run their own personal businesses, they don't have health insurance. They do not prioritize it. Please prioritize health insurance for yourself and your family. For the people that are employees, that they have health insurance, please always try to make sure that your office covers a good amount of health insurance for you. Not the one, if there is a range that you need to contribute an extra, maybe like 5 or 10,000 naira, because the premium doesn't even really go that high, for you to have, for them to take you up from where you are to like a better one, you can pay that extra premium, because the time that you will need it, you do not know. The time a family member might need it, you do not know. And then for other forms of insurance, the difference between you listening to this call and the average man on the street, if you're in Nigeria, to have insurance cover for a lot of things in your house, your cars, or things that are precious to you, please get it. A lot of people buy insurance for their cars for just getting it so that they could pass road safety check. That's all they are buying insurance for, so that when road safety will stop them, you just show, oh, don't worry, I have insurance. The day the insurance will come handy for you, you do not know, and it's a small premium. Then I always advise for life insurance. One of the things that we know is that, not to sound, gloom and doom, but one of the things we know about life is that nobody's getting out alive. It's just a rule. Sorry, I don't know if this is covering this. Let me just take it up. It's just a rule that we all know that we are not getting out of this world alive. Nobody's going to say, oh, you know what? I live for 1,000 years. Nah, we don't hear that. So if we all know that there is a day will come sometime that we're going to leave this earth, why don't we have a form of life insurance? Then for the people that are above 40, why don't you have a form of annuity? If you're just hearing that word for the first time, check for life insurance covers and check for annuity covers for you that are above 40. What it does for you is that you're paying a premium, and whether in your old age you decide that it's at 60 or that you want to some of those monies, if nothing happens to you, fine and good. At that age, you take the money, whatever you've gathered, you can split it and do whatever you want. Or you say, at the time that I'm going to pass on, whatever remains in this thing, please move it on. And then for a lot of guys that are here, a lot of guys are the ones that carry the burden of the family. You should have life insurance. You should have a form of annuity so that at any day, anything happens to you, because we are not the ones that protect ourselves, your family always would have something that the insurance company comes to pay them as a guaranteed sum that will be a reasonable sum for a premium that you are paying back. This amount comes to like 10,000 naira this month, 5,000 naira that month, 20,000, 30,000, something that you can afford, that you're accumulating for the future. And then peradventure, I know somebody that was contributing 50,000 naira premium on insurance, and in the space of 3 months or so had an accident and died. And I think the insurance cover was about 10 million or so. The insurance company paid the family the 10 million naira. Now, that 10 million naira would never replace the life of that person, but is a cover for that soul. Now, if you then move up a notch, I don't know who I'm speaking to here, that you have a lot more money in the terms of what you've accumulated, you've gotten assets over the years and all, then you can start to think of a trust where you can entrust that money, that even if anything happens in the future, whether it's you put it that you want your child to get all the way to university. When they get to university, there's an amount that they're going to be paying them every month. And then after the 10th year, you're supposed to use it to buy a land. You can organize that as automatic as I've said it with a trust. You can even protect your children from when they marry, from having access to their spouses having access to their money. This is applicable to the people abroad. Having access to that money, it never gets to the spouse never gets to that money. You can even be wealthy and the spouse never gets to that money in case of a divorce. You can organize that with a trust. Now, as your wealth increases, you can then start to look towards a trust that has both health insurance, life cover, annuity, and other forms of covers for you. Now, as you move over to that level of wealth, you can start to think that, but you, the one that you can do tomorrow, starting tomorrow, that is Monday, is this what that I've said. You can look for an annuity with an insurance company. You can get a life cover. You can get HMO for yourself, for yourself and your family. And if you're single, you can get the health insurance for yourself, just in case. It saves you costs in the long run. But in the short run, it looks like a small premium. So I just wanted to just chip that in. So now I've spoken about stocks, and I don't know how many people here are invested in the stock market, but simply stocks help you to be a part owner of a company. And I will not end this call. I will not speak about this call without speaking so much about what is happening in the stock market, both locally and globally. But I'm going to add this caution before I start to wound down. There is, when things start to go up, you pay attention. But when everybody starts to talk about a particular thing, it might be a sign to sell. Let me say that again. When people are talking about something, it's a time for you to pay attention. When everybody starts to talk about something, it might be a sign for you to sell. So the stock market is a good place in the long run, but you should know that some stocks are not to be held forever. It's a market, is not a parking store. It's not a fixed asset. I don't know how to put this, but let me put it in the best way possible. Now, companies have their upsides and their low sides. If you buy a stock, for example, that has done 200, 300%, it's okay for you to try to sell and look for the opportunity in something that is less. So let me use an example. Some people bought in GT from when it was 60 naira. This year is not this year, and it rallied up to 100 naira. So it means that if you had put in 10 million, you had gotten you had made an additional 4 million naira. So if you had put in 6 million naira, you had put in 6 million naira, you probably had made 4 million naira, and then you're sitting at 10. Or if you're putting 100 million and 60 million naira, you had gotten 100 million naira. That's rallying up to 100 naira. Now, there are other stocks like Sterling that are still around 8 naira currently. I think when they did their IPO, it was 7 naira. It might even come down to like 6 naira again and turned up to 7 naira from what I'm looking at the stock. But what are their upsides in the next few years? I feel like it's a good buy. So now putting your money and that stocks climbs to like as much as like 12 naira. You sold MTN as at that time. You've sold maybe like a bit of your GT shares, and then you are reinvesting some of your profits here. You are not putting extra money, it's your profit that you are putting into the stock. And then it has a potential of rising. There are other companies too that seem like they have like a good breakout in the future. Like Wema Bank too. I think they're doing a lot of like good things in that bank that still has like a lot of upsides. So you could still put your money in those places. Then you could still go for the blue chips, people like MTN. MTN still has like a long way to go because the people that are going to need more data are the people that have not made. In fact, as somebody makes some money, the first thing they will do is to buy a smartphone. Some of these people that do not have houses, immediately get their first apartment, one of the first things they will do is to go and look for smart TV. All those things will require data. And as the world moves into AI and all those things and remote work and all, you need data to power those things. MTN still comes into play. So you see that it becomes a part of your life that you can't do without. So it's wise that you still put yourself into owning some of those companies. How do you go about that? There are different apps that you can download. There's iInvest, there's Bamboo, there's Trove. But if you have a bit more money than you have like about 10 million naira and above that you want to spend on, buying stock, I would advise that you open like a proper stock brokerage account. You can use things like Cardinal Stone. I could recommend Cardinal Stone to you. You could use Meristem. Use AfroInvest, they've been doing anyhow recently. So I would advise you can use Cardinal Stone. Their feature on their web page is like pretty straightforward for you to sign up, and you can still see what is happening to your portfolio in real time. I don't know, people have like CSCS accounts, and then you could monitor, see these things that I put here, this matrix for checking some of the stocks, the P/E ratio, dividend yield, your 52-week range. I just want you guys to, if you can just do like a screenshot and just take this and put in your AI and tell it to explain it to you. I'll have wanted to, but it's just taking like a long time for this class. But what this does for you is helps you to check what is happening to your stock. So it's not just that you hear that something is doing well. You can just do a bit of an analysis for yourself. I do like a stock market class every month. I've been doing that for about 3 months now because I realized that there's no need to gatekeep this. There's a lot for anybody that attended like my first stock market class. Whatever was said in that class, no matter the amount that you put, no matter the amount, you've done over 100% of that because the market was very, very new, was still growing as at that time. Right now, you might not make that this thing. You might make it 10, 20% gain right now because a lot of the stocks are hitting some of their peak and they will not move as much. But for the future and where we are looking at, still like a good place for you to, still put this thing. So I don't know why this annotation is. Shego, am I the one that drew this red?
No, it was on your side. It wasn't on my side.
Oh my.
I think you did
Okay.
some annotation, so that's why.
Oh, okay. Let me try and see if I can clean it. Sorry, let me see if I can clean this. Okay. All right. It's a mistake from mine. So let me close this. So, in everything that we've said here, we're just talking about having a realistic plan. The most beautiful thing about the investment world is just the consistency of it. The automating these things as much as you can, having like real like example this thing. So you could say it's 100,000 that you want to start with. You could say it's 50,000 you want to start with. For the people abroad, you could say it's $100, $200. Do you know? I don't know for the people abroad if you guys have any stock brokerage accounts, whether it's Robinhood, eToro, I don't know which one that you guys use, but you could just get on those applications and sign up first so that you see some of the stocks and what it looks like to buy your first $100 or $50 stock. And then you could just get like recommendations. I could send like some recommendations, Trisha Gona and all. And then you start to see the changes and how these things work. The richest men in the world made their money in as much as their own play is different, because the way to get rich in this world is to build a business and take it to the stock market. It's not to build a business. Building the business is not what gives you the most money, but taking the business to the stock market is what gives you the most money. That is why till the day Dangote will leave this earth, he must continue to build a business and take it to the stock market. You've heard that he wants to list a part of his refinery in the stock market. He knows what he's doing. Once you take your business to the stock market, it gives you, you exit the money that you brought into that business, the stock market will give it back to you, because people like you and I will go and rush and want to say, oh, let me buy it now that is still, the price will still going up. You go and carry your money and give him. He has taken part, while he still owns a part of that company in the market that is returning something for him. And then he goes again and invests in that business. That is how Tony Elubelu does it. That is how Otedola has done it. That is how Boa Foods has done it. And that is how they keep doing it. But regardless, all we need to know is that we can still be invested in these people, get our own share, get our own return, especially when we can enter at a good time and still get like good dividends. Because the stock market returns money to you in two ways, in capital gains and in dividends. So some people pay really good dividends, and then at the other ones, the stock markets can still appreciate. For example, let's use NACO. NACO was trading around last 2 years around 20 naira. Now NACO is over 100 naira. So if you bought NACO, say at 10 naira, which was in 2022 was around 10 naira. No, COVID was around, it went down to like 5 naira during COVID or so, because people were not traveling. So people that bought NACO say at 5 naira, now NACO is well over 100 naira. So that 5 naira has turned to over 100 million. That 5 million naira that you put maybe in 2022 is currently worth over 100 million in NACO. So those are real like investments, but you didn't need to put in 50 million. It might have been that you had an investment strategy of putting in 20,000 in different shares, depending on how, what your own projections for them are. And you are doing it on a consistent basis. It returns higher for you. So, but because I'm speaking to a lot more people here that have, I'm going to just say you guys have like middle income. You have a lot more to start to put into the market and be intentional about it. Spread your risk between low risk, the stock market. Then look at silver. I'm just going to recommend this. Look at silver. You don't need to buy silver directly. You can buy ETFs that are exposed to silver. ETFs are exchange traded funds, or you can buy companies that are into silver directly, that are just buying silver directly. I feel silver is going to still have a good run like gold. Now, gold has been rising. China has been buying gold in mass. If you check the amount China has been buying gold in the past 3 years, it has been spiking. There is a reason they are buying gold. The countries don't just go around buying things like that or stocking up gold. There is a reason behind those actions. So you should always think long term in why is a country like China trying to buy as much gold as possible? Why are they buying silver? Why are they buying the things that seem like they have value that will hold value over a long term? The world is scared of a world war. The world is scared of a trade war. The world is scared of another epidemic like a COVID. We don't know when it's going to happen. The world is scared of another crash, is a proper crash like what happened in 2000, a financial crisis that happened in 2008. And the next financial crisis that is going to come into the world is most likely going to be a debt problem, because the world is spiraling out of debt. Everybody's owing. Nigeria will borrow more money than it can repay. has more money than it can repay. China on its own is trying to cut down on its US debt. So all these people are buying up assets, things like gold, silver. So silver still has like an uptrend. I remember when silver was less than $8 per ounce. Now silver is running to almost like 40, 50 naira per ounce. So silver is still like a good buy. If you can't buy it directly, just buy companies that are into, some of this plays. But most importantly, have a consistent amount. And please do not ignore cryptocurrencies. When I say do not ignore cryptocurrencies, please read about it. Read about some of these things that are happening there. You don't need to be an expert. You don't need to go all in. You don't need to just take a very small fraction of your money and expose to those places. The essence of this program that we're having is it opens your eyes to say, okay, I can put in my bread in this place, put this one in the water, put this one in the air. I'm calling all those things assets. So I'm putting this one in gold. I'm putting this one in this stock that is buying gold. I'm putting this one in buying. Okay, I heard that there's this land that they are selling for 60K in this place. Okay, what's the potential of it coming up in the next 5 to 6 years? Okay, let me put some money in it. There's this other investment that I heard that dollar mutual funds. Okay, I'm using that one as my savings account. I've carried $1,000 and put inside at 9%. I'm sure of this one at the end of the month is going to return this amount for me. When you do all those things, it takes a lot of liquidity away from your hand. But when it takes it away from your hand, you have planted it in the future. It's not in your hand anymore. But as long as you keep having it in places that where you can have access to it, most of the time people are exposed to doing something that will not benefit them in the long run with that money. So I spoke about like compound effect for a lot of these things. This 30, 20-year plan, I feel like you can cut it short by doing something consistent, especially if you have a lot more money. This one, I put it for a low yield. I put at 30 years, investing 100,000 naira at 12 years for 30 years, the amount that it was going to give to you. You don't need to wait for that amount to, for you to keep investing. But it just shows you that if you can have a portion of your money that you consistently keep investing in assets that return a good value for you, over the next few years, you'll be surprised at where you will be. So, I did this small portfolio breakdown of allocating your resources. It just mostly what I spoke about. Allocating your resources into different dimensions of taking your age into consideration. If you're a middle-aged person, please look at, the stock market, look at gold. You don't need to buy gold directly. You can buy ETFs that are exposed to gold and silver. You can do the same in diversifying a lot of your things into maybe like treasury bills, mutual funds. And then if you're not in Nigeria, these things are applicable in where you are. But I would tell you to split your investments between Nigeria and that place, because you can get a higher return here, especially for your fixed deposit. So the amount that you get here for a dollar denominated fixed deposit is around between 9 to 10%. Last time I checked, I could still check up for you guys for some of the big names in the industry. Abroad, you will not get more than 5% or 6%. So the people in those countries they have the access that you have in terms of being able to invest back here, but you do have that. So why are you not using that to your advantage? Because it's a guaranteed sum. It's not as if business is closing down anytime soon. It's just that some of those guys take that money and try to invest in maybe like Euro bonds or bonds that Nigeria is offering for dollar-denominated assets because we need dollars. So it's a better play for you. So by the time you diversify this, trust me, I'm looking at everybody coming out in the next, few months by the time to take some of these tips and saying, oh, because we attended this class, I was able to expose my money to this, my money to that, and I'm better for it. So I will stop here. Thank you. Are you there, Shagun? Hello? Hello? Hello,
Yeah,
Shagun?
yes, I'm here. Sorry. I was
All right.
muted. I just wanted to unmute myself. Thank you so very much. Thank you everyone also for being on the call. Thank you, Online Banker. Please help me appreciate Online Banker. He's taking us through a serious masterclass. Oh, sorry, my video is also off. Let me turn it on. Yeah, thank you so very much. Please, if you have any questions, you can use the chat box to just take one question. Otherwise, would allow you go to bed. Considering today is Sunday and tomorrow is Monday, we've got to go to the office or various places of work. Okay, so the app is you were asking someone says kindly list the app, but I think that question has been answered. The app actually has been mentioned before is TOSHL. Please just check in the chat, it's TOSHL. All right, so Online Banker, the people are appreciating you in the chat box. Thank you
All
so
right.
very much for your time. Thank you for sharing your wisdom with us. And yes, let's not keep you waiting or keep you longer on the call. We really appreciate you. And please, I'll put you on the spot here. Next conference is in January. We're going to be bringing you physically to speak with us at the physical annual conference. So I say thank you so much, Online Bank. I really appreciate you.
No problem. We'll still have a lot more to talk about. Thank you. I appreciate you, my brother.
All right. Thank you, everyone. Have a wonderful night rest, everyone, and have a great week ahead. And don't forget, we are going into the most exciting week of the month, especially for employees. Don't forget to always first take out the amount to invest before you begin to splurge. And we've learned a lot from the 50, 30, 20% that we were taught. So please, guys, let's act on these things that we've been taught. Appreciate you all. Have a wonderful new week and a fantastic month of November. Bye-bye.
Yeah, bye. Thank you.
Yeah, bye. Yeah,
Thank you so much. Thank you.
thank you. Thank you, everyone. Thank you.